Good morning, everybody. Hope you're all well. It's Michael here, and it's the 25th of January 2020. Time flies. I hope you've all been trading well. It's your next installment of the Supply and Demand Market Report, where we go through the markets and we take a look at what opportunities they're presenting for us. I was taking a look at the chat, and I saw some questions about the Euro Aussie and the New Zealand CAD, so I thought rather than start posting charts on the thread, I thought we would go through those markets in some detail today, maybe as sort of case studies, looking at the questions that were asked about them. So I will share my thoughts. As always, these are just my thoughts. I will share my thoughts regarding those two markets in particular, and if we have time, if we don't spend too much time on those, then we can look at the usual markets. So we'll start off with a quick reminder about the upcoming free webinar. It's for the 1st of February. It's at 8:30 p.m. London time. I thank you to all of you who've shown an interest in attending, quite a few of you. So if you're watching this video and it's before the 1st of February and you're interested in attending, just send me an email on the email address on your screen, storehouseanalytics@gmail.com, and I will add you to the mailing list. The list will be sent out on the day of the webinar, and you can join us and we can take a look at supply and demand, looking at the foundations and also looking at some markets. So let's get to it so we don't make the video too long. All right, so we'll start with the New Zealand CAD. So Telepath, hi. I've seen a lot of your posts. Thank you for sharing your thoughts. So we'll take a look at the New Zealand CAD and some of the confusion. I hope I address your questions specifically. My understanding of just reading it superficially is that you were wondering about taking a short on the 4-hour, but were worried about the daily being in demand. Okay, so we will take a look at that. So let's start with that, and then we'll look at the Euro Aussie as well. Just a quick thank you to all of you again who continue to share on the thread and the candor that you show each other. So we will look at this market, starting with the weekly chart, which Telepath was looking at. So prices are currently at this level and have held there for several weeks now, in and around that 87.33 area. The next demand below is around there. There's also some in this area. Now this market is one that has gone into a change in trend so far. Actually, that's incorrect. We're looking actually more at something really acute like that. Or indeed, if your eyes don't see that, which mine do, you might want to look at that. But you'll notice that this level didn't make a lower low after reaching that high and coming down. So this would be the more accurate line. And sometimes it's important that you pay attention to that, to those kinds of little details sometimes in the market, because it's a question of where could price not go to. Where was there too much demand for it to continue selling down to, or too much supply for it to continue rising through? Okay, so this is the picture that you have on the weekly chart for New Zealand CAD. So looking at this market, the most appropriate action right now will depend on your disposition, on your personality really. Are you comfortable with shorting a market that is trying to establish an uptrend, is breaking momentum on even larger time scales and smaller time scales, or are you going to patiently wait to try to join the emerging uptrend and buy at a demand zone? You can do both if you understand the rules and you are thorough and quite versed in the methodology. There are pros and cons to going short, more pros than cons to going long. So this is a scenario when prices hit this level. The question is, what do you do right now? So as prices are falling back, do you want to join the short see if you can carry prices down into the demand, and obviously be ready to also buy at demand to see then if prices will go higher. So let's go down to the daily chart, and on the daily chart we get a closer look, and this was the worry for Telepath, that prices were in this tested demand zone and they hung around there for several days before popping out. This is a supply zone that was created in the context of that uptrend on the weekly, but the daily clearly has stopped the uptrend. It hasn't yet established a downtrend though. So when you look at this market, do you want to go short there? Do you want to go long down into these levels here? That's really the decision you have to make. It's really that simple. The issue I had with going short for Telepath is that the 4-hour zone that you were looking to short was all around this sort of area, this sort of middle area around this price point, which is neither up nor down, or down in here. So kind of in the middle. Not really usually a good proposition to be attempting to go short up in there. So this rally up from a tested demand zone, that was the first test, also was quite shallow. Obviously we would expect a deeper test, but then that deeper test never went anywhere. It just stayed, and you can see that this price level, prices never really went below it. So there are warning flags, warning signs for you to be very mindful, and these are the things that we talk about, the detail, that sort of postgraduate level that you go to in the roundtable when we meet. These are the little nuances that are not able to be talked about in the free videos, and the experience that is gained with being specific rather than the generic approach that we often have with the markets, being more focused with the methodology as it shows us what prices are doing and are about to do, which is more important for us, so we can anticipate what's going to happen. So prices are down here. The 4-hour level you are looking at, I believe, let me just go back to the picture you showed, this 4-hour level here was the one that you were looking at, which is this one, I believe, which was this one. Now this is all in hindsight, and hindsight is always 2020, but you've already heard my reasons for why roundtable members would not short this type of market, a market that has come down and has gone into a basing pattern right here, and then more additional information on the 4-hour, as I was just pointing out to you about this level. If you take a look at the 4-hour level, again, there is no follow through to new lows. So anything above this line that is not going to new lows is a risk. Is a risk for you to be going short at any levels that didn't carry to new lows. Plus, as we said earlier, you're sitting at daily demand, which is a big picture demand level. Yes, you are sitting at weekly supply, but bear in mind that weekly is in an uptrend. For it to get into an uptrend, you're looking at supply zones being removed, demand zones being created, and when prices come back to it, we would expect them to be respected. So this 4-hour short was quite a difficult one to take because of all those reasons. So what I would suggest is, if you are going to short a market that is rising at all, you would want it to be in more suitable locations, i.e. big picture supply, and prices not sitting or struggling to get through to new lows when it's also in the middle time frame area. Yes? So just be mindful of that. So I hope that helps your thought process, Telepath. So we will go on to the Euro Aussie now, I believe that was. Yeah, let's go to the Euro Aussie. Let's do that. Okay, so I think with the Euro Aussie we will do again the weekly. That should be the weekly. Let me just take a look. I believe somebody asked that question. Somebody asked that question on the page before. Let me just go back one. You guys have been posting quite a lot. People have been busy. So where was that Euro Aussie question? Here, I think it was this one. Was it? Yeah, it was this one. So currently in the sell. Oh, that was Johnny D. Okay, so I think this was a trade you took, Johnny, and I believe it worked out quite well for you. So well done on that one. But we'll go through it now. Let's take a look at it now and see what we've got in terms of opportunity. My first impressions is that this isn't a market that would be worth too much time in trying to take long-term trades in, because of the structure right now. It is quite a sideways market that's not really going anywhere. So immediately what that tells me when I look at a chart like this, or even for when me and the guys are analyzing it, when we see a market like that, we just think, right, there's limited profit potential in here. We have a market that's coming up into supply. It's been in an uptrend. The uptrend has begun to struggle. We were breaking demand zones, supply zones were being created, but again, we're coming through the supply zones and trying to go higher. So it's quite a sloppy market. That's my first impression. So these impressions, as I call them, are really, really important, because then that's what we use to begin to manage our expectations from the get-go as to, if we are going to take this trade, the quality of trade has to be priority, and especially the profit taking, how we get out. If we're going to get out for a loss, how are we going to place our stops, given that this market is not showing us our ideal setup on the weekly chart. So it's still going up, it's going to new highs. You have the market now at a significant supply level with two levels on top of each other there. The demand is still holding, but now bounces from the demand are not getting as high as they have been. So the bounce from here went as high as this and then hasn't been able to follow through yet. So we're already beginning to see again weakness in the buying side for this market, which would make us worry about any sort of longs. The question is, though, why don't then we go short if we're worried about the longs? I believe Johnny's trade was a short. So if we're looking at this market as of when prices dropped from here, demand held. Did we create supply? Not quite. So going short in there would have been something that we wouldn't have done, because we don't actually have any evidence that supply is coming in. As of the time prices hit this demand zone, you'd have been well within your rights to consider going long in this market. It so happens that supply, if we go to the daily level, supply did come in. So what then the roundtable members know to do is that, okay, we're not going to take this for weekly income, but we definitely would look at it for short-term income trades. So already we have our decisions, and we will go through some of these ideas in the free webinar, the thought process. So it's fairly simple by the time I take you through the processes for analyzing the charts within a few weeks, maybe even less than a few weeks. If you put the time in, you might be able to understand all the moving parts, but then the thought process and why you're making what decision, what is the counter decision, the thinking that you put into it is what you get when we are talking on the round table or in the one-to-one sessions. I go through some of that in the video series as well, to help you really build a foundation for your understanding and application of the methodology. So here is a market that is going sideways right now. On the daily chart, you can see more information. So if you're a short-term income trader, you're looking at levels to trade off of these, but being very, very mindful of where you are, knowing that it's going to be a challenge for you to expect a big move in the market, but you can play the levels level to each other, make some short-term income. Why not? But it's just being mindful. The people who would get disappointed are the people, for example, who would short here and anticipate that they would get a joining of the trend that would carry them to new lows. But by the time this sort of move up happens, people will get worried and flustered and scared, and rightly so. They've just seen a huge chunk of their profit wiped out. Not many people, contrary to what they say, can hold on to this kind of move against their short position, especially as you have valid supply zones being removed, right? So let's be clear about it. It would have been a difficult trade to take in the long term, but in the short term, shorting and getting 3 to 1, 4 to 1, maybe even on smaller time frames, definitely doable. Okay, and let's go down one more, and you will see there are much more opportunities to go short at various levels in here. But again, none of them carry you far. So again, you are looking at levels that you could have used for short-term income. Right now, this is not a market I would trade, is why I'm talking in hindsight. I don't see any opportunities in it. It's quite flat. Even the top side is not as nicely defined right now. It's multiply tested several times, and again, the push to the downside is not being as far. You'll notice these levels here, they managed to get below that, but when they came up, they couldn't take it to new lows again. So you're hanging around the same price points. Anyone who shorted here and didn't take their profits, again, difficult for that trade because it didn't carry to new lows. Could you have made money shorting there and trying to get out around the lows here? For sure. But you have to be able to know that and recognize what is the actual profit potential this or any other trade you're taking is giving you. And so manage your expectations, know when to move the stops, or even take the entire trade off of the table. Okay, so I think we have time for one more. I think also to remember that we will talk about some of these things in the free webinar on the 1st of February at 8:30 p.m. London time. So again, a quick reminder, just to email me at storehouseanalytics@gmail.com if you wanted to attend. So let's take a look at the US dollar. Let's see what the US dollar is doing, and we can start with the big picture charts. Even if we look at the monthly, not much there. Let's take a look at the weekly a bit more closely. So again, we still have a market that is going to new lows. It's beginning to test that uptrend. In fact, if you are paying attention, you will see looks like my house is beginning to wake up. I can hear my kids. So you will see the move down there. So you are beginning to worry now that there's no way that the sellers are able to, at least in the interim, go further down. So we are going to be looking for buying opportunities at that demand below, and the supply is there. So we don't have an established uptrend just yet, but we are definitely no longer in a downtrend. So you want to be mindful of doing any long-term short trades, and also be mindful that there will be buyers down in here when prices do drop. So going to the daily chart, we can see again a clear uptrend on the daily. Prices now will struggle up in there. Now, where do we want to buy if we want to join it? So you're having demand zones being created. This one is not fully formed yet. It looks like it will be demand, but we haven't had a big enough move away yet. I know some of you will already have that marked, but I would suggest you consider waiting because you don't have the criteria fulfilled for a quality level just yet. It is a level, but we always focus on not just is it a level, but what is the quality of that level to help us just manage our finances, our money, and not put our money at unnecessary risk. So for now, that is a demand zone, that is a supply zone. let's go take a look and see if we have any opportunity. So already I can see there's an opportunity to go long first at that level, meaning we could go short the euro. If prices today came down here, we would look to the euro to see if we could get to see if prices were at an opposing supply and look to go short there, just trying to play with the correlations as well. Now with this level down here, you may also want to break it down a little bit more to see if there's anything below that you want to be mindful of. It's not very clean, so I wouldn't go there. If you have the will, you may want to extend this level a little bit, or give yourself a little bit more room in terms of the stop loss. But these are all the little nuances that are useful to be aware of. Okay, so I'm going to stop the video there for this week. Thank you all for your kind comments. I see Aussie man made quite a nice comment. I appreciate you all. Thank you for sending me the ones of you that email me your comments as well. So we will see each other on the 1st of February. We'll go through the basics, and if you are interested in purchasing the video course, either go to the website storehouseanalytics.com or just email me at storehouseanalytics@gmail.com, and I will facilitate that for you. If you wanted to come on the one-to-ones with me, again, just email me, let me know. We can arrange a slot for you in the schedule. All right, thank you all very much. I look forward to speaking to you all again. Trade well, trade safe. Bye for now.